Hashtag YouTube intro. Police car light energy stocks are exploding. China just dropped a mega AI model, and Netflix admitted 300 shows used AI without telling you. Plus, Trump's teleprompter got hacked, Google's beating Apple at regulation, enterprises are in an AI compute arms race, and Anthropic's making a controversial move. 7 stories that'll reshape tech in the next 24 hours. Stick around to see which one affects your wallet. Energy IPOs surge as investors hunt for ways to play AI boom. The energy sector just became Wall Street's hottest ticket, and it's all because of one thing: artificial intelligence is absolutely ravenous for power. We're seeing energy companies hit the IPO market at speeds we haven't witnessed in over a century, and investors are throwing money at them faster than ever before. This isn't some random market blip, it's a direct response to the computational demands of modern AI systems, which consume staggering amounts of electricity to train and operate. Data centers running large language models and neural networks are essentially power-hungry monsters, and the infrastructure to feed them simply doesn't exist yet at the scale we need. What makes this surge particularly significant is the business opportunity it represents. Energy companies aren't just selling electricity anymore, they're positioning themselves as essential infrastructure for the AI revolution. These IPOs are raising capital at record-breaking speeds because investors understand a fundamental truth: you cannot run the AI economy without reliable, abundant power. Whether it's renewable energy startups, nuclear power modernization companies, or grid infrastructure firms, everyone in the energy space is suddenly a potential goldmine. The companies coming to market right now are solving one of the most critical bottlenecks in AI deployment. But here's where it gets interesting for the broader tech landscape. This energy boom reveals something crucial about where we actually are in the AI cycle. We're past the hype phase and deep into the infrastructure phase. The real money isn't just in AI software anymore, it's in the physical systems that make AI possible. This shift could reshape the entire tech economy for the next decade. If energy becomes the limiting factor for AI development, then whoever controls that supply chain controls the future of artificial intelligence itself. We're watching the foundation of the next era being built in real time. China's Moonshot AI releases Kimi K3, the largest open-source model ever, rivaling top US systems. The AI landscape just shifted dramatically, and if you've been following the competition between American tech giants and Chinese innovators, this moment is impossible to ignore. Moonshot AI just dropped Kimi K3, a 2.8 trillion parameter model that's officially the largest open-source AI system ever released, and it's performing at the same level as OpenAI and Anthropic's most advanced proprietary systems. This isn't just another model release, it's a watershed moment that signals a fundamental power realignment in artificial intelligence development. What makes this particularly significant is the timing and the strategy behind it. Moonshot, backed by Alibaba, is releasing this cutting-edge technology openly, meaning researchers and developers worldwide can access, study, and build upon it. That's a radically different approach from how OpenAI and Anthropic operate with their closed, proprietary models. By going open source at this scale, Moonshot is essentially democratizing access to frontier AI capabilities while simultaneously demonstrating that Chinese companies can match or exceed American innovation. The release coincides with Shanghai's World AI Conference, which is clearly no accident. This is a statement about China's technological ambitions. The broader implications are staggering. Open-source AI at this performance level accelerates development everywhere, which could democratize AI capabilities but also raises serious questions about safety, control, and how these systems get deployed. We're entering an era where the most powerful AI tools aren't locked behind corporate paywalls, which fundamentally changes the game for startups, researchers, and yes, potentially bad actors too. This is the moment the AI industry stops being dominated by a handful of American companies, and that changes everything about how we think about AI's future. Netflix says around 300 titles used generative AI. Netflix just quietly revealed that 300 of its titles are already using generative AI, and honestly, this is the moment the streaming wars fundamentally changed. We're not talking about some distant future scenario anymore, this is happening right now, across hundreds of shows and films you're probably already watching. The company buried this news in their earnings report, framing it as a win for efficiency, faster production, better quality, lower costs. But what Netflix is really telling us is that AI integration in entertainment has moved from experimental to operational, and that's a seismic shift in how content gets made. Here's the business reality that makes this significant. For decades, Hollywood's economics have been brutal: massive budgets, long production timelines, and razor-thin margins on anything that doesn't become a blockbuster. Generative AI changes that equation entirely. If Netflix can produce comparable quality output in less time and at lower cost, they gain a competitive advantage that's almost impossible for traditional studios to match. Most of these 300 titles used AI in post-production, which means things like visual effects, color grading, sound design, and editing. These are the expensive, time-consuming parts of filmmaking that suddenly become cheaper and faster. That's not just a technical improvement, that's a business model transformation. But here's what should concern you: this is the beginning of a much larger story about who controls creative work and what that means for artists. When AI can handle post-production at scale, you need fewer specialized technicians. When it can generate backgrounds, fix scenes, or enhance footage, the labor market shifts. Netflix isn't being evil here, they're being rational. But the cumulative effect across the entire industry is that we're watching a fundamental restructuring of creative labor happen in real time. The question isn't whether AI will be used in entertainment, it's whether we'll have any meaningful conversation about what that costs society before it's too late. Kalshi says it caught Trump and #8217 as teleprompter operator insider trading. This is the kind of insider trading scandal that makes you realize prediction markets aren't just abstract financial instruments anymore, they're becoming real money pits where information asymmetry can be weaponized. Federal investigators have caught Gabriel Perez, who's been operating Trump's teleprompter since 2016, allegedly using advanced knowledge of presidential speech content to place bets on Kalshi, a major prediction market platform. Perez would have known exactly what the president was about to say before the public did, giving him a massive advantage in betting markets where users are essentially gambling on Trump's exact words and policy announcements. It's the kind of edge that would make any trader salivate, and apparently, it was too tempting to pass up. What makes this case particularly significant is that it exposes a fundamental vulnerability in how prediction markets operate at scale. Kalshi has positioned itself as a legitimate financial platform, but it's still fundamentally built on information that can be stolen or leaked. When you create a betting market around real-world events, especially political ones, you're creating powerful incentives for people with inside access to exploit that information. The teleprompter operator is basically the ultimate insider in a speech prediction market. He knows the content before it's delivered, before markets can price in the information, before the public reacts. That's not a fair game, it's a rigged one. The broader implications here are worth sitting with. As AI and prediction markets become more integrated into how we understand future events and make financial decisions, we're going to see more of these insider threats. This isn't just about one operator making some quick cash, it's about whether these platforms can actually function fairly when information flows are this unequal. Regulators are clearly paying attention, but the real question is whether prediction markets can ever truly be secure when the events they're predicting involve people with access to privileged information. Welcome to the future of finance, where your edge might literally be standing next to the president. Google is better than Apple at playing the AI regulations game. Google just got hit with a massive EU order to open up Android to AI competitors, and here's the wild part, they're actually winning this fight. On the surface, it looks like a regulatory loss. The European Union is forcing Google to grant rivals deeper access to Android, the operating system running on billions of devices worldwide. But if you zoom out and look at how tech giants navigate regulation, Google is playing this game far more strategically than Apple ever could. Here's the context: Android has been Google's fortress. By controlling the operating system, Google controls which AI services get priority, which get buried, and which never see the light of day. The EU's decision essentially says that's anti-competitive. But here's what makes this interesting: Google has spent years building relationships with regulators, making strategic concessions before they become mandatory, and positioning itself as the reasonable tech giant. Apple, by contrast, has fought regulators tooth and nail, creating an adversarial relationship that costs them far more in the long run. Google's playbook is to give a little, look cooperative, and maintain control of the narrative. The real implication here is bigger than just Android access. This is about who gets to define the future of AI infrastructure. When regulators force open access, they're essentially saying that whoever controls the pipes controls the future. Google understands this better than anyone. They've already built relationships with smaller AI companies, they've invested in open source projects, and they know how to compete even when the playing field looks level. For Apple, their closed ecosystem strategy is becoming a liability in an AI-first world where interoperability and access are becoming regulatory requirements. What we're really watching is a shift in how tech power works. It's no longer just about who builds the best product, it's about who can navigate regulation, maintain public goodwill, and position themselves as inevitable. Google just proved they're better at that game than Apple, and that matters far more than this single EU order. The AI compute gap: enterprises are buying infrastructure faster than they can measure what it costs. Companies are spending billions on AI infrastructure without actually knowing what it costs them. That's not hyperbole, it's what new data on over 100 enterprises reveals, and it's a problem that could reshape how AI gets built and deployed across the entire industry. Here's what's happening. Organizations are racing to buy GPUs and specialized AI chips from hyperscalers and API providers, but their spending is accelerating way faster than their ability to track it. Most of these companies can't clearly see their unit economics, meaning they don't actually know the cost per token or per inference. Even worse, GPUs are sitting idle at around 50% utilization on average, which is like paying for a car that only runs half the time. Yet despite this visibility problem, enterprises are already planning to switch providers or add new ones within months. They're making these massive purchasing decisions based on integration complexity and total cost of ownership rather than just looking at headline prices, which suggests they're thinking strategically but potentially flying blind. This matters because it reveals a fundamental mismatch in how AI infrastructure is being adopted. The industry is moving so fast that procurement and deployment are outpacing the financial controls and measurement systems needed to manage them responsibly. Companies are essentially betting that specialized compute chips and systems they don't even use today will be worth the investment, but they're making those bets without solid data. If this pattern continues, we could see massive capital inefficiency, vendor lock-in problems, and a reckoning when CFOs finally demand accountability. The winners in this space won't just be the companies with the best chips, they'll be the ones who help enterprises actually see and control what they're spending. Here's why Anthropic is pushing states to regulate AI faster. #Anthropic's AI regulation paradox, why the company that pushed for laws now says they're broken. Anthropic just pulled off one of the most fascinating corporate moves in recent tech history. They're essentially saying the AI regulations they championed less than 2 years ago are already obsolete. The company that actively lobbied for landmark transparency laws in California and New York is now warning that these same rules may not keep pace with how quickly AI technology is actually evolving. This isn't some cynical flip-flop, it's a window into just how fast the AI landscape is shifting and why even well-intentioned regulation struggles to stay relevant. Here's the context that makes this wild. When Anthropic endorsed those transparency laws, they were genuinely pushing the industry toward accountability. These regulations required companies to disclose how their AI systems work, what data they're trained on, and potential risks. It seemed like a smart move. Get ahead of the conversation, shape the rules in your favor, and establish yourself as the responsible player in the room. But now, just 18 months later, their head of state policy is essentially saying the technology has moved so far beyond what those laws anticipated that they're becoming ineffective. We're talking about AI systems that can do things nobody predicted, with capabilities that emerge in ways even their creators don't fully understand. The bigger picture here is that we're caught in a fundamental mismatch between how fast technology moves and how fast governance can adapt. AI isn't evolving in predictable, linear ways, it's advancing exponentially, with new capabilities appearing almost overnight. Traditional regulation takes years to draft, debate, and implement. By the time a law is finalized, the problem it was meant to solve has already mutated into something different. Anthropic's position suggests they're realizing that static regulations, no matter how well-intentioned, might actually be worse than no regulation at all if they're based on yesterday's understanding of the technology. This raises a genuinely difficult question: how do we regulate something that's fundamentally unpredictable? Thanks for watching Neural Brief. Stay ahead of AI and tech trends, subscribe, hit the bell, and like this video. See you tomorrow.